right, let's dive right in. Today we're taking a deep dive into Sunway REIT's Q3 2024 performance. You know, we love to get our hands dirty with these reports. So we've got a stack of them here.
Oh, yeah.
We've got the Q3 2024 financial report, their 2023 integrated annual report, and their 2023 sustainability report ready to go.
A lot of reading.
Yeah, I got to say, though, just glancing at this RM 1.86 price tag, a DPS of 9.34C, a dividend yield of 5.05%, payout ratio of 80.22%.
Yeah, some interesting numbers there.
It definitely caught my attention. So let's unpack this a bit and really see what these numbers tell us about Sunway REIT's properties, their financials, the risks they face, and of course, their potential for growth.
Oh, the good stuff.
The good stuff.
Yeah.
All right, so started with a little bit of a foundation. Sunway REIT is one of Malaysia's largest diversified REITs, boasting a portfolio of 19 assets valued at RM 9.0 billion as of December 2023.
Yeah, and a really interesting thing about those assets is they're strategically located within prime integrated townships.
Oh, so it's not just about the number of properties.
No, it's about the location.
It's about the location. You got it. And they're not just all in one spot either. We've got Klang Valley, Penang, Perak.
Spread out.
Spread out.
Yes. And when it comes to the types of properties in this portfolio,
They run the gamut.
they really do. We're talking retail hotels, offices, industrial properties.
They even have an education asset.
They even have an education asset. Quite a mix.
Yeah, if you look at it broken down by net lettable area,
Right.
retail dominates,
Makes sense.
78%.
Wow.
Then you've got hotels at 10.8% and offices at 9%.
So really retail focused in terms of that net lettable area. Okay, so let's zoom in a little bit to those Q3 2024 numbers. We're looking at a 1% management expense ratio, 16.1% total return, and a 5.7% dividend yield.
So how do those numbers hit you?
Well, I'd like to put them in context a little bit. Compared to the annualized figures from 2023, we're seeing increases in both the management expense ratio and total return. The management expense ratio was at 0.9% last year, so up to 1%, and then total return was at 11.5%, so a pretty nice jump up to 16.1%.
Significant jump. Yes. Dividend yield, however, has dipped a little bit down from 6% to 5.7%.
A little bit of give and take.
Exactly. Now, what really caught my eye, though, was Sunway REIT's NAV per unit after income distribution climbed to RM 1.4840.
Yeah, up from RM 1.4646 at the end of 2023.
Exactly. So that's
Healthy jump.
it seems like a pretty healthy jump to me. I like that. All right, so I want to take a closer look at some of the properties that kind of popped out to me in these reports. And one was Sunway Pyramid Mall, which is currently undergoing a pretty massive RM 190 million refurbishment.
Yeah.
And they're really trying to enhance its offerings, attract new tenants, and this makes me think that they see a lot of potential there.
Absolutely. Sunway Carnival Mall is also getting a facelift. Phase 2 of their revamp is costing approximately RM 360 million.
Wow, so they're not shy about investing in their properties.
No, they're not.
That's good to see. And then there's Sunway Lagoon Hotel,
Oh, yeah.
which operates on a master lease model,
Which is interesting.
where the rent is calculated based on the hotel's gross operating profit.
So that aligns their incentives.
Yeah, it's a pretty unique model.
Mutually beneficial.
Absolutely.
Ah,
I like that. So yeah, all of these developments and these refurbishments, I think, really show Sunway REIT's commitment to maintaining attractive and profitable properties for the long haul.
yeah, it paints a pretty positive picture.
Definitely. All right, let's talk a little bit about some of those nitty-gritty financial details. When we compare some of the key metrics from 2022 to 2023, we see that the average cost of debt rose from 2.98% to 3.80% in 2023.
Yeah, that's a reflection of the global rise in interest rates.
Yeah, something all REITs are having to contend with these days.
For sure.
So how is Sunway REIT kind of managing this interest rate risk?
Well, they've been utilizing fixed rate debt strategies.
Smart.
Yeah, lock in those rates.
Lock it in.
And they're also very much aligned with Bank Negara Malaysia's monetary policy.
That's good to hear. So they're really trying to stay ahead of the curve.
Yeah.
Now, I do have to say they do carry a significant amount of debt,
Yes,
but
they emphasize their ability to refinance it.
yes, they do. And they attribute that to,
Their strong asset base and favorable market liquidity.
yeah, so it's not just about having the debt.
It's about having the plan to manage it.
Exactly.
You got it.
All right, so let's not sugarcoat things. We do need to acknowledge the business risks laid out in these reports.
Of course.
And for you, what are some of those pressing issues?
Well, interest rate risk remains a key concern.
even with those mitigation strategies in place.
Exactly, because interest rates can fluctuate.
Yeah, they can be unpredictable.
And that can impact their financing costs.
For sure. What else?
Property valuation is another concern.
Of course, so much goes into that.
Right. It's tied to market dynamics, economic conditions, occupancy rates, tenant retention.
Yeah, a lot of moving parts.
A lot of moving parts.
And speaking of tenants, what about tenant risk?
Right. That's always a big one for REITs.
How are they handling that potential tenant turnover or those rent reductions that could happen?
Proactive engagement with their tenants, offering competitive lease terms, staying flexible.
So really taking that hands-on approach to making sure that those properties stay filled and profitable.
For sure.
It's a balancing act.
It is.
All right, so we've talked about some of the risks. Let's talk about growth. What are some of their strategies for driving future expansion and value creation?
Well, they're actively pursuing acquisitions,
Makes sense.
always looking for new properties to add to their portfolio.
Looking to diversify.
Exactly. And that could involve venturing into new sectors,
Right.
maybe expanding geographically.
I like that approach.
And then they're also focusing on redeveloping existing properties.
Smart.
Asset enhancement initiatives.
So they're not just sitting on what they have. They're really trying to
Unlock that value.
exactly unlock that value.
Uh-huh.
We talked a lot about pre-COVID, and obviously COVID had a huge impact on the real estate landscape.
Big impact.
So how has Sunway REIT been kind of navigating this new world that we're living in?
Well, they've acknowledged the pandemic's impacts, and they're adapting to new trends. The rise of e-commerce, the demand for flexible workspaces.
So they're not just reacting.
No, they're anticipating those changes.
I like that. So I'm curious about any recent acquisitions.
Oh, yeah.
Anything stand out to you?
One that stands out is the sale of Sunway Medical Center Tower A and B.
Oh, a sale.
Yeah, back in August of 2023, that brought in RM 430 million.
Wow.
Well,
Quite a divestment.
It is, and I'm assuming this is all part of their portfolio optimization strategy.
Exactly. REITs often divest to free up capital for new acquisitions or to invest in higher growth opportunities.
Strategic moves.
Strategic.
I like it. All right, so let's talk a little bit about occupancy rates.
Yeah, the lifeblood of a REIT.
How are those looking for Sunway REITs?
Well, they vary depending on the property type and location.
Of course.
But Sunway REIT has maintained pretty respectable levels, particularly in their retail segment.
Which makes sense because that's their bread and butter.
Right, you see those bustling malls.
Yeah, you do. They're doing a good job of attracting those tenants and keeping them. Absolutely. And speaking of malls, there's a trend emerging in the retail space.
Oh, I'd love to hear about it.
We're seeing a shift towards more mixed-use spaces.
Oh, interesting.
Where malls are integrated with residential towers, offices, hotels.
Creating those destinations.
Exactly. Live workshop play all in one place.
Makes sense.
Yeah.
Yeah. Catering to those evolving lifestyles.
Yeah, absolutely.
Now, all of these trends are affecting the market. But there's something unique about Sunway REIT
Oh, yeah.
that gives them a little bit of a competitive edge.
You're talking about the Sunway ecosystem?
I am.
Being part of those larger Sunway developments gives them a built-in customer base,
And
cross-promotional opportunities.
yeah, they're really leveraging the strength of that Sunway brand and the interconnection of their developments to create this.
Synergy.
Exactly. That's what I was looking for.
Oh.
All right, so we've touched on those main risks: interest rate, property valuation, tenant risk. Are there any other challenges that we should kind of put on our radar?
Well, refinancing risk is a big one.
Right, cause REITs rely heavily on debt financing.
Exactly. Their ability to refinance that debt at favorable terms is crucial.
Yeah, so it's not just about having the debt again, it's about being able to manage it over the long term.
For sure.
So what kind of things could make refinancing difficult for them?
Well, interest rate environment,
Yeah.
the health of the capital markets, investor sentiment towards REITs, Sunway REIT's own creditworthiness.
Yeah, a lot of external factors that can really play into that.
Absolutely.
Okay, so one last thing before we move on, and this isn't really a specific risk, but it's more of a broader challenge.
Okay.
And that is this rapid evolution of technology and what it means for the real estate sector.
Right, because technology is changing the game in every industry.
Every industry.
And real estate is no exception.
So how do you think REITs need to adapt to kind of stay ahead of this curve?
Well, they need to embrace technology to streamline operations, enhance their properties,
Yeah.
create those seamless tech-enabled experiences
That everyone's expecting.
that people are expecting. Think smart buildings, data analytics, tenant engagement platforms, AI.
Yeah, so it's about more than just keeping up with the times.
Hmm.
It's about using technology to really create that competitive advantage.
For sure.
That's what it's all about. All right, well, these are all fantastic insights to keep in mind as we continue to explore Sunway REIT. And we've covered a lot of ground, but there's still more to uncover. So in the next part of our deep dive, we're going to delve even deeper into their financials, break down those Q3 2024 numbers, and really explore those details that will help you become a Sunway REIT expert.
Sounds good.
I'm excited for it.
Me too.
Stay tuned.
Welcome back to our deep dive on Sunway REIT.
Ready to get into the numbers?
Oh, yeah, let's crack open these financial statements.
All right, so we've talked about the properties. We've touched on some of the risks.
Yeah.
Now let's really get into how this company makes money.
Let's do it.
So revenue streams, we know retail is their biggest sector, but they also have hotels, offices.
And that interesting master lease model for Sunway Lagoon Hotel.
Yes, where the rent is tied to the hotel's performance.
Yeah.
I'm really curious about how that affects their revenue.
Yeah, well, if you look at their 2023 gross revenue, it hit RM 715.689 million.
Okay.
And that includes rental income, master lease income, car park rentals, even other operating income.
So they're really pulling in revenue from multiple sources.
Yeah, it shows you how diversified their portfolio is.
That's good to see. And in terms of year-on-year revenue growth?
Well, for a full comparison, we need to look at previous annual reports.
Right.
But just from this 2023 snapshot, it's clear they've got a solid base.
Yeah, it seems like their approach to acquisitions, asset enhancements, tenant engagement, it's working for them.
It's paying off.
All right, so let's talk about profitability. What kind of profit margins are we looking at?
Well, in 2023, their profit before tax was RM 339.556 million.
Okay.
And after taxes, their net profit was RM 338.191 million.
So those are some healthy numbers.
Yeah, it points to good cost management.
Very important. All right, so for those income-focused investors out there, myself included, what are those key dividend metrics looking like?
Well, their distribution per unit for 2023 was 9.34 sen.
Okay.
And that translates to a dividend yield of about 5.05% based on today's price.
All right, and I know they aim to distribute at least 90% of their distributable income.
That's right. They're committed to rewarding their unit holders.
That's what we would like to hear. So we mentioned debt earlier. What about their debt-to-equity ratio? How much leverage are we talking about?
As of December 2023, it was around 0.71 times.
Okay, so a moderate level of debt.
Yeah, definitely manageable, especially considering the quality of their properties.
Right, and they seem pretty confident about their ability to refinance.
Oh, yeah, citing that strong market liquidity.
And the value of their assets.
Exactly, they've got those financial safeguards.
Good. So another metric I always like to look at is the interest coverage ratio. How well are they covering those interest expenses?
That's a great point. And their interest coverage ratio is a healthy 3.6 times. So their earnings are more than enough to cover those interest payments.
That's a good sign.
It really shows their responsible debt management.
That's what we want to see. So shifting gears a bit.
Yeah.
What are some financial indicators that point to future growth potential?
Well, net asset value per unit is a good place to start.
Of course.
As of September 2024, their NAV per unit after income distribution was RM 1.4840.
So up from the previous year.
Exactly. And that shows growth in the underlying value of their assets.
And we know they're not standing still. They've got those acquisitions planned. They're working on asset enhancements.
All of that should contribute to further NAV growth.
Exactly. All right, so we've got a pretty good picture of their financials now.
Yeah.
What about some of those other details that can give us a little peek behind the curtain into their operations?
Well, one thing that stands out is their emphasis on risk management.
Oh, yeah. They have a whole risk management committee.
They do. They're dedicated to identifying and mitigating potential problems.
So they're not just waiting for things to happen.
No, they're proactive.
I like that. And they're not just thinking about traditional financial risks either.
Right. They're looking at environmental and social factors, too.
That's becoming increasingly important these days.
It is.
So what are some of those initiatives?
Well, they're implementing energy-efficient measures across their properties.
Okay.
They're looking at renewable energy sources and encouraging their tenants to be more sustainable, too.
So they're really trying to incorporate sustainability into every aspect.
Yeah, they're focused on community engagement, making a positive impact.
It's not just about the bottom line.
No, it's about being a responsible corporate citizen.
Absolutely. And these efforts ultimately benefit all their stakeholders.
Long-term value creation.
Exactly. So we've got financials, we've got sustainability. Anything else we should add to our Sunway REIT knowledge before we wrap up?
Well, one more thing that's really important in this day and age is innovation and technology adoption.
That's one of their favorite topics.
Mine too. Technology is transforming the real estate sector.
It really is.
And Sunway REIT is right there with it.
Give me some examples. How are they using technology?
Well, they've implemented smart parking systems,
Okay.
integrated digital payment platforms, and they're even exploring AI to improve customer service and tenant engagement.
So they're creating those smart, connected buildings.
Exactly the kind that today's tenants and consumers expect.
It's about staying ahead of the curve, creating that competitive advantage.
Absolutely. And these tech-driven initiatives are all about creating long-term value for their unit holders.
All right, so we've learned a lot about Sunway REIT today. Their properties, financial, sustainability, tech initiatives. But there's one big question that remains.
And what's that?
Should I invest?
A million-dollar question.
Right. There's no easy answer, of course.
It depends on your individual financial goals, risk tolerance, investment horizon.
But we've got all this information now. So what are some key factors investors should think about when they're evaluating Sunway REIT?
Well, first and foremost, you need to define your own objectives.
Right. What are you looking for from this investment?
Income growth, a combination of both.
Once you know that, then you can see if Sunway REIT aligns with those goals.
Exactly. So let's say you're focused on income generation.
Okay.
You'd want to look at Sunway REIT's dividend history, their distribution policy, their track record of generating consistent income from those properties.
So it's not just about the current dividend yield.
No, it's about understanding what drives that income.
Makes sense. So what about those who are prioritizing growth?
Well, they'll want to look at the acquisition pipeline,
Mm-hmm.
asset enhancement strategies, and their ability to capitalize on new trends.
So understanding those growth drivers and how they affect net asset value.
Right, and don't forget those external factors. Economic conditions, interest rates competition.
A lot to consider,
There is, and of course, risk assessment is crucial.
of course.
Interest rate risk, property valuation, tenant risk, refinancing risk. We talked about all those.
Right. So it's about weighing the potential rewards against those risks.
Exactly, and diversification is key.
Always.
You never want to put all your eggs in one basket.
Great advice. So beyond the numbers and the risks, are there any other factors investors should consider?
Well, ESG is becoming increasingly important.
Environmental, social governance.
Right. And Sunway REIT is making a real effort to incorporate that into their operations.
So for investors who are looking for sustainable and responsible businesses.
This is a good sign.
Okay, so we've given everyone a lot to think about. But before we wrap up this part, there's a common question we get from people who are new to REIT investing.
What's that?
How are REITs different from traditional real estate investments?
The classic REIT versus real estate dilemma.
It can be confusing.
It can. So let's break it down. When you invest in a REIT, you're buying shares of a company that owns those income-generating properties.
You're not buying the properties themselves.
Right. You're getting a piece of the pie.
I like that analogy.
Yeah.
And those shares are traded on the stock exchange.
Exactly. So it's easy to buy and sell.
That's a big advantage over traditional real estate.
It is. And another key difference is that REITs have to distribute most of their taxable income to shareholders as dividends.
Which is why a lot of people love them.
Exactly. It's a built-in income stream.
So it's all about understanding those differences and deciding which approach aligns with your goals.
And remembering to diversify your portfolio no matter what you invest in.
And we're back for the final part of our Sunway REIT deep dive.
Time to wrap things up.
We've covered so much ground. Their property portfolio, their financials, risk management technology. It's been a lot.
A whirlwind of information.
It has been. But before we say goodbye, let's take a minute to recap those key takeaways.
Sounds good.
What really stood out to you about Sunway REIT? What makes them a potentially attractive investment?
Well, their diverse portfolio is a big plus.
It makes sense.
Multiple sectors, strategic locations. It all adds up to stability and resilience.
Right, spreading the risk.
Exactly. And being part of those integrated townships gives them a real edge.
Like having a built-in customer base.
And those cross-promotional opportunities.
They've definitely used that to their advantage.
They have. And then you've got their strong financial performance.
Those consistent dividends.
Yeah, and their proactive debt management.
Music to any investor's ears.
Yeah.
And, of course, their commitment to technology.
That shows their forward thinking.
They're not just stuck in the past.
Definitely not. Now, of course, every investment has risks.
Right, we can't forget about those.
We talked about interest rate risk, property valuation, tenant risk, refinancing risk. Those are all important to consider.
It's all about weighing those risks against the potential rewards.
Exactly. And remembering to diversify.
Always diversify.
Okay.
All right, so before we officially wrap up, I'd like to leave our listeners with one final thought.
Okay, I'm ready.
How might Sunway REIT's focus on technology impact their ability to thrive in this rapidly changing market?
That's a great question.
Technology is a game changer in real estate.
It is, and Sunway REIT seems to be embracing it. Smart buildings, data analytics, tenant engagement platforms.
They're using technology to become more efficient, improve their properties, create those seamless experiences.
The question is, will it be enough to keep them ahead of the curve?
Only time will tell. But they're definitely putting in the effort.
They are, and that's a good sign.
It is. So there you have it, folks. A deep dive into Sunway REIT. We've covered it all.
From properties to financials, sustainability to technology.
It's been quite a journey.
It has.
If you want to learn even more about Sunway REIT, head over to their website, explore the resources we've mentioned.
Remember, knowledge is power.
Stay curious, stay engaged, and stay tuned for more deep dives into the exciting world of REITs and beyond.
Until next time.
Thanks for listening.